Welcome back, traders and investors. We have Andrew Keene on the line, president and founder of KeeneOnTheMarket.com. Andrew, how you doing today on this synthetic Friday?
Good. It is a synthetic Friday. I can't remember the last time that the option market closed for expiration on a Thursday, but I had to take that in consideration when I'm trading my positions. If I'm long options, obviously, then I'm short time decay, so I have to keep that in consideration.
Yeah, Dennis actually pointed that out also because usually you have, Good Friday and Easter earlier in the month. So you do have a different dynamic there. So could you just touch again on what you said there because of the shortened week as far as how you're adjusting your option positions?
Yeah, I mean, I was a market maker on the floor of the Chicago Board Options Exchange for over a decade, and then I moved upstairs. When I say upstairs, I'm just in an office. I have 8 monitors and a computer, and I trade from my computer. And in general, I'm a directional trader. So in general, I'm usually long calls or long puts or long call spreads or call butterflies, and just taking consideration that there is a long weekend. If I'm long options, then I'm long gamma, and I'm also short theta. That means that every single day that goes by and my stock doesn't move, I'm paying for that time decay. So this morning when I come in, the first thing I'm going to do is start selling out some of my May positions just because I know the time decay is going to start eroding probably around like 11 o'clock this morning.
Okay. And when were your 10 years on the floor?
2001 to 2011. I was started in the General Electric pit, and then I was the biggest independent Apple trader in the world from 2006 to 2009. That's when Apple was $80, unfortunately, before iPad, iPhone, and every other cool device. But, Apple was my bread and butter product, so I'm always trading that one. And then basically, what happened was, and I talk about this all the time, this is the best time ever for retail traders to trade and the worst time ever for market makers. When I was a market maker on the floor, the option market was very, very wide. I can make money on the profit margin between buying the bid and selling the offer. Now, as new wave of technology has evolved, we see the markets much thinner, weekly options, and they're penny wide markets. So this is the best time ever for retail traders to trade options because you can get in and out of positions without giving any theoretical edge up to the market maker.
Okay, that's a great point. So talk about your transition from going, being on the floor, blood, sweat, and tears, to moving to the screen. Was that a tough transition for you?
It was a tough transition. That's a great point. And, I wish it was easier. When I was on the floor, I had a lot of positions. I had up to 125 option positions in different stocks. And I never cared if I was down 5,000 in one position because I'd be up 10,000 in another. And my P&L swings were just ginormous. And, like in 2007, 2008, when the world was imploding, my P&L swings were $30,000 a day. And 80% of that money was mine because I was on a deal with a backer. And then I moved upstairs, and I never wanted to leave the trading floor. I wish I was a market maker, to this day. But the fact is, the business for a market maker was not profitable anymore, and it was profitable to be a retail trader. So I left the floor. I tried to trade equity options upstairs, and I tried to trade them the same way I traded on the floor. And there's a big difference, and there's a big learning curve. It took me about 6 to 9 months to regain profitability again, and I had to realize when I move upstairs, everything is a risk versus reward setup. So anytime I put on a trade, anytime as a day trade, as a swing trade, as a couple day trade, I always have to look at my risk versus reward. I can look at it as a percentage of my book, or I can look at it as a total dollar amount. Like, how much am I willing to risk on this trade? And if I'm right, where am I going to take this off? So now I look at targets before I even look at, where like I don't buy options for $1 to sell them for $1.10. I look at my targets. I look at the charts a lot more. When I was on the floor, I never looked at charts. It's just a different way of thinking and different transition. And it took me some time to become profitable, I'll be honest with you. But now, I'm seeing everything, seeing all the angles, and I'm doing really well.
How many positions are you trading now? Now, I mean, I see you trade futures, equity options, currency pairs, and commodities. How many positions will you have on at one time?
Usually around 40 to 45, today's expiration. So I have some April options that go away. The way I trade is a little bit unique. I watch institutional order flow. So we work with a scanner, and what the scanner tells us is every single equity option trade across every exchange. And I watch 1,500 trades in a day. And then I allocate my capital and my money, just like being on the trading floor. It's the same mentality of it, of what the institutional funds are doing. Per se, let me give you an example. 2 days ago in DAL, Delta, we saw a trader come in and buy 9,000 of the DAL June 34 calls for $1.26. So I went on board. I bought 150 of them. It's about $17,000 of risk. The next day, coincidentally, Delta jumped about $1.50. I took that position off for a $5,800 profit overnight. So I watch this institutional order flow. I combine it with the charts, and then I allocate, percentages of my books on every trade. But around 40 positions. I do trade some forex at night. I've been a little bit more nimble with forex lately. I day trade Facebook, Apple, Tesla, Twitter. Those are my four main products. I day trade only. I'll never have a position overnight unless it's earnings, but I do day trade those during the day.
And so when you're day trading, these stocks are very volatile. Are you looking? I mean, now, Dennis, I don't know if you heard him at all before, my partner here in pre-market prep. Kind of what you do in the options markets is something that he tries to do in the stock market, in the individual equities as well with the open book. And kind of keying on the institutional order flow, using those areas that provide support and resistance to the market. Is that the same thing that you're doing, or are you trying to go to the charts and pick your spots?
Try to go to the charts a little bit more on the day trading. Stocks, from my point of view, and I've traded every product out there. I've traded commodities, commodity options. I've traded futures. I've traded forex. I've traded stocks outright. I've traded equity options. I've traded every product out there. For me personally, stocks are the hardest thing to day trade, period. Because 80% of them are in a trading range during the day. And as you're trading stocks, you want to be trading trending stocks so you can get on the side of the trend and let it ride. So trading stocks, from my point of view, are really hard. Those four I specifically named work really well. I trade them technically. I use a 5-minute bar and a 15-minute bar. I use something called the Ichimoku cloud.
Mm-hmm.
I'm sure you might never. Have you heard of it? Good. Okay.
Yeah,
So I
Hubert
use the
Sutter's. Yeah, Ichimoku. We know about that. Sure, go ahead.
Yeah, yeah. So I use the Ichimoku cloud. I'm a big fan of this. I found out about it when I was in Asia in about 2006, and I've done a lot of study and research on it, and it keeps you on the side of the trend. So I'll day trade. I use the 5 and I use the 15-minute for confirmation, and it's been working very successfully in Facebook. Sometimes I'll trade stock during the day, 1,000 to 3,000 shares, or sometimes I'll trade, 100 lot of options, and then I try to get out of it by the end of the day. But it works really, really well as a day trading product for those four stocks specifically I've had success with.
But do you have to find that you're rotating in and out of a few different stocks? I mean, Apple definitely has lower volatility, or are those just the stocks that you're comfortable with? You're comfortable with the trading patterns, and you don't swap one out for another, perhaps.
Well, when I was looking at the Ichimoku Cloud to use it as a day trading vehicle, I thought about it, okay, and the Ichimoku Cloud is a trending product, okay?
Mm-hmm.
It keeps you on the side of the trend. If you think about what trends during the day, it's the big names, right? I want high momentum stocks that are going to move during the day. If Apple, Tesla can move $12 in a day. So if I get on the right side of the trend that day, it can take me in all day. So I use some other factors, but it works really well. I've tried it with LinkedIn, Google, Netflix, Priceline, but a lot of times the stock is like $1 wide. So it's really, really hard to take, put a stop loss in. You're going to have like an $8 stop loss. Facebook's a penny wide. So Facebook's amazing. So I use it almost every single day. Facebook has been my most profitable trade using the Ichimoku Cloud on a 5-minute bar.
And do you hop in at the open with something, or do you like to let the first few minutes shake out, or do you pick your points right off the open and you're in? Because when I was at more actively trading stocks off the open, I mean, I could tell when I got my opening fill, within a matter of seconds, before the price even moved, if it was going to be profitable or not. Do you tend to jump in on the open, or do you kind of let things shake out a little bit?
No, I mean, I'll take whenever, I'm a breakout trader, so I want to take breakouts with the cloud. So if it gets
Okay.
into the cloud and breaks to the upside, I'll take a trade there. If it gets into the cloud and breaks to the downside, I'll take a trade there. I've noticed a little bit, on the opening, it's sometimes there's traps where they'll run it up 50 cents and run it back down 70 cents. So there's been a little bit of trap. Intraday, it's been working really well. Like there's a setup 2 days ago on Facebook that worked out great. There's a good setup in Twitter that worked out really well. So I don't mind taking it. It only breaks the cloud. If you got to look at the kind of day it is. Is it a trading range day or a trending day? Obviously, it's going to work better on a trending day. So it breaks the cloud probably twice in a day. I'll take between 0 and 2 of those daily. But I always, like I said, I always have stop losses in place. I'm not saying every time it's going to work. No trade works 100% of the time, but it's been very profitable. And Facebook's my favorite one to trade on. We run some other scans that tell me, what percentage of the time Facebook is lower from the open to the close. So I know this year, Twitter has sold off from the opening print to the closing print 2/3 of the day. So in general, that puts in the back of my head, I'd rather take setups to the downside than to the upside.
That's an excellent point. So now, look, do you trade options in like the Facebook and Twitter as well, or do you try and just use those as your day trading stocks and not let your options position affect the way you trade it?
It kind of depends. I know I do a little bit more than just trading the cloud. Like I know Facebook has an ATR average daily range of about $2.15. And like I know today specifically, obviously today's expiration, gamma is going to be really high, theta is going to be really high, and these options can double within seconds. Last week on Friday, I bought Facebook calls, and if you get a 50-cent move in stock, the out of the money calls will double from 15 cents to 30 cents. So I'd rather trade the options like on a Thursday or Friday, and then I'll trade the stock earlier in the week.
Interesting strategy. So, looking at the Facebook chart that you have right here, I mean, you've actually had a couple, I mean, besides that 55.88 low here, really getting 3 of the last 4 tops between, 60.19, 60.45, call the whole 60.35 area. So are you more prone to try and use that area to short off, or are you just going to wait for it to break that area than playing on the long side?
Yeah, that 60 level is very critical. You make a great point. What is resistance becomes support, and then support becomes resistance. So it was resistance to the upside first, and then when it came to the downside, it found support there a couple times. So now, once again, is resistance here. If I looked at it on the daily chart, I know it's under the Ichimoku cloud on the daily. So technically, it's leaning a little bit to the short side. They report earnings next week, and we actually saw a little selling pressure this morning because Google sold off, and they have kind of similar business models with their mobile revenue space. So $60 is a level that I'm always keeping an eye on. And then I think it was like 2 weeks ago where it got up to that 60.13, and then I bought some of the 60 weekly puts, and that worked out great. So now I think about it. If Facebook can break to the upside, if it breaks through 60s, the seller is going to be, obsolete, and the stock can run for a while.
Okay, now you talked about using stops. Do you use physical stops in the market, or do you use mental stops? Are you nimble enough and disciplined enough that when it hit your stop level, you instantly react?
I only use stops in stocks. I do not use stop losses in options. I actually didn't know until about a year ago there are stop losses in options. I didn't. I was on the floor forever. I didn't know there were stop losses. So, I mean, for a retail trader, I know a lot of traders that say they like to put a stop in at 50% of what they pay for their option. So if you buy an option for about $1, put a stop loss of 50 cents. That's fine. I'm a very different trader. I trade a lot on feel. So I trade anywhere between like 1,200 to 1,500 options a day. So if I don't like a trade, I'll just click my mouth and get rid of it.
Yep.
I'm trading in a world where I can go long to short, short to flat, and flat to long with one click of the mouse. So I don't mind ever taking off a position if it's not working. We all know that when we have a losing position, what do? We sit there and stare at it, and then we start cheering it on, and it never works out. And then it affects our other trading. So yesterday I had a great day. It was one of my best probably 5 days this year. But I did have some positions that were losing. And I was like, hey, this trade's not working out. Let's click them off. Let's get rid of this position and move on to something better.
Okay, just real quickly, I mean, you gave that, the point about, being a retail trader now in this options world. You've had experiences on the floor, off the floor. Just, what tips can you give, to new traders and people getting involved in the markets?
Yeah, I mean, unfortunately, the number I always say is 90, and 90% of people that trade lose money. And the reason they lose money is a couple different ways, and it's psychology. 2 days ago, I run a live trading room. We have about 400 subscribers, and the Dow was down 200 points. And I bought some LinkedIn calls, and everybody's sitting there complaining about how much money they're losing. And I got longer than I was long. And then the market rallied, and we ended up 100. And then went from a goat to a genius. Okay, and the thing you got to realize right now, we are in a raging bull market, and all pullbacks are being bought right now. Right or wrong, that's how it is. Okay, we are in the biggest bull market I've seen in a long time. In 2007, 2008, I was always short the market. And I could take pain for a day, maybe a week, the market would rally. But in the long run, for those 2 years, the market always went down. So trend is your friend. We are in a bull market, right or wrong. I know personally I trade better in a bear market, but we're in a bull market right now. So trend is your friend. And always define that risk versus reward. You say, hey, I like this trade, but this trade could be wrong. If it is wrong, how much am I willing to risk on this trade? And it could be a percentage of your book or, a dollar amount. You can't go, hey, I think Google's going to go up in earnings. I'm going to buy calls. And then you lose on one trade and then
You're
you're
out.
done, right? So I put a lot of positions out there and, I know they're not all going to make money, but in the end of the game, I'm profitable.
Okay, I sure hope everyone in the chat room is listening to Andrew Keene here of Keene on the Markets because he's giving you some advice from trading on the floor, trading upstairs, psychology of the market, following the institutions, just a lot of things that we try and talk about here on pre-market prep. I know you got to get ready for the open here, Andrew. Thanks a lot. We'd love to have you on again. You gave us some great insight to the markets, and we appreciate you taking the time out from your busy day to be on pre-market prep.
I'll be on anytime and happy holidays.
Okay, thank you.
All right. Thank you. Bye.